Hi, everyone. I'm just going to go through some examples for the week 6 homework. So the first example is for question 1. Paige Jones and Joe Smith decide to organize the Bob partnership. Joan invests 20,000 cash. Smith contributes 16,000 cash and equipment having a book value of 2,000. Prepare the entry to record Smith's investment in the partnership, assuming the equipment has a fair value of 3,000. So the cash that Smith is contributing is 16,000. So we're going to debit cash 16,000, and the equipment has a fair value of 3,000. So we're going to debit equipment for 3,000. We use the fair value of the equipment, and then we're going to credit the capital, Joe Smith capital, for 19,000. Problem 2. The following is information related to Bob Company for its first month of operations. We have these various credit sales for January and these various cash collections for January. We want to identify the balances that appear in the accounts receivable subsidiary ledger and the accounts receivable balance that appears in the general ledger at the end of January. So for the subsidiary ledger, for Jones, we're going to have the 10,000 minus 7,000, which is 3,000. That's our balance. For Abe, it's 12,000 minus 8,000, which is Abe's 4,000 balance. Gore is 9,000 minus 9,000, so Gore's balance is 0. For the general ledger, we're going to add Jones and Abe together, so 3,000 plus 4,000 is 7,000. Problem 3, presented below is information related to Bob Company for its first month of operations. In this case, these are our credit purchases, and these are our cash of the amount of cash paid. Determine the balances that appear in the accounts payable subsidiary ledger. What accounts payable balance appears in the general ledger at the end of January? So for Jet, we have 11,000 minus 8,000. So the balance in accounts payable for Jet is 3,000. Ant is 15,000 minus 15,000. So Ant's balance is 0. Budget is 14,000 minus 9,000. Budget's balance is 5,000. And then for the general ledger, it's a 3,000 plus 5,000, so it's 8,000. Problem 5. Problem 4 has actually an example right within the problem. When you're doing the homework, there's a video walkthrough. Question 5. Bob has a balance in its accounts receivable control account of 11,000 on January 1st. Subsidiary ledger contains 3 accounts. Excuse me. Abe Company, 6,000, Bauer Company, 2,000, and Crow Company. During January, the following receivable-related transactions occurred. So these are the credit sales: Abe, 10,000, Bauer, 9,000, Crow Company, 4,000. These are the collections: 7,000 for Abe, Bauer, 6,000, and 5,000 for Crow. And we have 1 return for Bauer. So for question A, what is the January 1st balance in the Crow Company subsidiary account? So to determine that, what we have to do is we have to look at the balance in the accounts receivable control account, which was $11,000. And then we know that Abe's balance was 6,000, so we're going to subtract that. And we know that the balance for Bauer was 2,000. So what we did, we actually add the 6,000 and 2,000 together, and then subtracted it from the 11,000. So 11,000 minus 6,000 plus 2,000 is 8,000, is 3,000. So that is going to be Crow's balance in the subsidiary account on January 1st. Next, we want the January 31st balance in the control account. So to do that, we have to take our beginning accounts receivable, which we know it's right up here, was 11,000. Then we're going to add 3 items together. We're going to add Abe Company's credit sales, Bauer Company credit sales, and Crow Company credit sales. So Abe is 10,000, Bauer is 9,000, Crow is 4,000. So now we have 11,000 plus, and we have those 3 numbers, 10,000 plus 9,000 plus 4,000. If we add 10,000 plus 9,000 plus 4,000 together, I have it right here, it's 23,000. Next, we have to subtract the various collections. So we have Abe 7,000, Bauer 6,000, Crow 5,000. So we're going to subtract those three items added together. So 7,000 plus 6,000 plus 5,000 added together is 18,000. We're going to subtract that amount. And then the last thing we have to do is subtract the returns. We only have one. So that's Bauer's return of 1,000. So 11,000 plus 23,000 minus 18,000 minus 1,000 is 15,000. And then we want to compute the balances in the subsidiary accounts at the end of the month. So Abe's balance is, it started out, go up a little bit. Abe's balance started out at 6,000 right here. We're going to add to it the 10,000. We're going to subtract the collections of 7,000, and that's going to be 9,000. 6,000 plus 10,000 minus 7,000 is 9,000. Bauer's balance was 2,000. We're going to add on to that the 4,000, the 9,000 credit sales, subtract the 6,000 collections, and also subtract 1,000 returns. So 2,000 plus 9,000 minus 6,000 minus 1,000 is going to give us 4,000. Then for Crow Company, we know his beginning balance was 3,000. We figured that out in A. So that's going to be 3,000 plus credit sales of 4,000 minus collections of 5,000, which will equal 2,000. And then as a check, I just added those numbers together. 9,000 plus 4,000 plus 2,000 is 15,000, which is what we got for the balance of the control account in B. D, which January transactions would not be recorded in a special journal? That would be sales returns. Problem 6. Bob uses both special journals and a general journal. Bob also posts customers' accounts in the accounts receivable subsidiary ledger. The postings for the most recent month are included in the subsidiary T accounts below. And these are our balances and our other information, right? Determine the correct amount of the end of month posting from the sales journal to the accounts receivable control account. So the amount at the end of month posting from the sales journal to the accounts receivable control account is going to be that 110 for Abe, 140 for Crow, 200 for Davis, 230 and 220 for Frank. And if we add those numbers together, it's 900. So all of the debit postings to the subsidiary ledger account should be from sales invoices. The total of all these debits should therefore be the total credit sales for the month, which would be the same amount as the end of month debit to the accounts receivable. Problem 7. Bob Joe Company reports a net income of 100,000. Income ratios are 70% for Bob, 30% for Joe. Indicate the division of net income to each partner and prepare the entry to distribute the net income. So we have 70%, and I did it here. Bob, 100% times 70% is 70,000. We would credit Bob capital for the 70,000. Joe is 100,000 times 30%, which is 30,000. And we would credit Joe capital for the 30,000. And of course, the income, we already knew the income. They told us the net income was 100,000. So we would debit that income summary for 100,000. Problem 8. Page and Joe Company reports net income of 30,000. Interest allowances are page 6,200 and Joe 7,800. Salary allowances are page 10,000 and Joe 8,000, and the remainder is shared equally. Show the distribution of income. So first we have, if we look at page, we have the salary allowance of 10,000, which is right here. For Joe, the salary allowance is 8,000. And if we add those two together, that's 18,000. If we look at for our interest allowance, what we have, our page is 6,200. So we're going to put that here. Joe is 7,800. We'll put that there. And if we add that together, it's 14,000. The remaining excess or deficiency. Well, what we have here, so we have, if we were to total this out right now, it would be 32,000, right? 18,000 and 14,000 is 32,000. We only had net income of 30,000. So we have a deficiency. And since they share the remainder equally, we're gonna share this 2,000 deficiency equally. We're going to subtract 1,000 from Paige, subtract 1,000 for Joe, for a total of a negative 2,000. So in the end, Paige, we're going to have 10,000 plus 6,200 minus 1,000, which is 15,200. Joe is 8,000 plus 7,800 minus 1,000 for a total of 14,800. So the total is 18,000 plus 14,000 minus 2,000, which is the 30,000 of net income. Problem 10. Bob Company wishes to liquidate the firm by distributing the company's cash to the three partners. Prior to the distribution of cash, the company's balances are cash 52,000, Paige Capital credit balance 40,000, Joe Capital debit balance 18,000, and Alex Capital credit balance 30,000. The income ratios of the three partners are 2 to 4 to 4, respectively. Prepare the entry to record the absorption of Paige's capital deficiency by the other partners and the distribution of cash to the partners with credit balances. Well, what we have to do is we know that there's an 18,000, and I'm sorry, I think that should say, it says Paige's deficiency. It should be Joe. Sorry about that. Should be Joe's deficiency, not Paige. So let me change that. So, sorry, prepare the entry to record the absorption of Joe's capital deficiency by the other partners and the distribution of cash to the partners with credit balances. So, since we know the ratio for Paige is 2, the income ratio for Alex is 4. For Paige, and I think I have it right here. Paige is going to be 2.6. Alex will be 4.6. With the way we got the 6 is we added the 2 and the 4 together, right? Paige 2, Alex 4, that equals 6. So for the capital, 18,000 times 2.6 is 6,000. We will debit Paige's capital for 6,000. Alex's capital is 18,000 times 4.6, which is 12,000. We will debit Alex capital for the 12,000. And then we will credit Joe capital for 18,000. And that's to record the write-off of capital deficiency. Next, I think what it tells us, distribution of partners with credit balances. So for the next step, what we have to do, we know that prior to this, we had 40,000 for Paige's credit balance. So 40,000 minus the 6,000, right? We just debited 6,000 equals 34,000. So to write, we're going to have debit Paige capital for 34,000. For Alex, we had 30,000, which is right here. And we're going to subtract that 12,000. So 30,000 minus 12,000 is 18,000. So we're debiting Paige capital for 34,000, debiting Alex capital for 18,000, and crediting cash for the 52,000, which is the amount of cash that there was to distribute. So if you have any questions, please feel free to give me a call. Have a wonderful week, everybody. Bye-bye.